What's up, this is Ryan with Planet Cheapskate. In this video, we're going to be going through all the details when it comes to qualifying for a VA or Veteran Affairs home loan. What are the specific requirements, debt to income limits, and all the unique details when it comes to using a VA loan for your home loan financing. Now be sure to also stick around for a very valuable VA loan hack that will set you up on a great path to receiving some additional income by structuring your VA loan in a certain way. But first, I'd just like to take a very brief moment to personally invite you to subscribe and join our community. I do a home loan rate update every Friday going into the weekend, along with a new video every Thursday helping you manage through the world of credit, investing, real estate, and home loans. Also, when you do subscribe, be sure to hit that little bell and it will alert you whenever I release fresh content. Now with all that out of the way, let's dive right in. So you're trying to decide which loan you should get. If you're unsure, try checking out my super quick video here that will break down each of the 4 main loan types in under 2 minutes. But if you've already decided that a VA home loan is the loan for you, then you're in the right spot. A VA home loan is a great option for someone who has served our country or is serving our country currently, and it is also available to a surviving spouse that has not remarried. But before I go any further, I'd like to just say that if you are a veteran or someone serving our country currently, that I am so very grateful for your service and thankful for all you do and are trained to do to protect our freedoms. So with a VA home loan, there are many awesome features with this loan that make it a very appealing loan if you meet the requirements for eligibility. To be eligible for a VA home loan, you must have served or be serving active duty for at least 90 days during times of war or 181 days in times of peace. You also may qualify with 6 years of Reserve or National Guard service. And also, surviving spouses who have not remarried may also take advantage of the VA home loan benefits. So a few of the quick pros and cons of the loan are: first, it allows for a super low credit score of 500 depending on the lender and circumstances on your credit report. It has no mortgage insurance, but it does have a one-time funding fee that can be usually paid at close or financed into the loan. And finally, the best part of the VA home loan is it's a zero down payment loan product. What I would say is maybe the worst part of a VA home loan is that out of all the major 4 types of home loans, they are the strictest when it comes to credit report issues. And most veterans I see that are not able to get pre-approved, it's usually because of a derogatory credit item on their credit report. One bit of great news on VA loans, however, is they tend to have lower interest rates than conventional loans and are more on par rate-wise with FHA and USDA. And this is because the government loans have a slightly higher level of protection against risk by the different government agencies that sponsor them. So I'm going to be diving a little bit deeper into several of the critical details regarding a VA home loan, and by the end of this video you will know everything you need to know about the VA home loan. So when it comes to a VA loan, the Veterans Administration doesn't put any sort of minimum credit score stipulations on the borrowers. However, the lenders typically have their own special rules, which they call overlays, that require a certain score. There are some lenders who will go all the way down to 500 on the credit score. This is as long as you don't have any major collection problems or any problems that have not been cleared up on your credit report. The bad news about qualifying this low, however, is the lenders are usually, but not always, going to make you go through what's called a manual review, which just means a human set of eyes are going to be reviewing your file using the VA loan handbook to see if they can do your loan. And also, if you do have a lower credit score, your DTI ratio, the debt to income ratio allowances, will be further reduced down. Now, during this manual review, your credit will also be heavily scrutinized, and any negative trade lines, such as past due payments or collections, will be very detrimental to you receiving a pre-approval. So when it comes to credit items, a VA loan is the least forgiving. If you have collections, medical bills, student loans, bankruptcies, foreclosures, and stuff like that, a VA loan is not going to be your best bet. For medical collections, they actually don't count against you. However, if you have any other collections that are over $5,000, they will have to have either payment arrangements, be paid off completely, or oftentimes you are forced to wait 12 months and 1 day before you are able to get pre-approved. If the collections are under $5,000, then you will be able to get pre-approved as long as you are current and have payment arrangements set up or have them paid off. The payment will also count against your debt to income ratio for qualifying. Now, if you've had a bankruptcy, you'll have to wait 2 years until after dismissal, and applying with a foreclosure, deed in lieu of foreclosure, or a short sale, you will be forced to wait 3 years after the incident was last reported on your credit report. If you have student loans deferred or in forbearance, they count against your debt to income for 0.5% of the total balance. So on a VA home loan, the Veterans Administration again does not have any sort of debt to income limits that they place on the borrower. But again, the lenders do have special rules that they put on there, and I've seen lenders that will lend with a great credit score all the way up to 59.999% back-end debt to income ratio and 44.999% front-end debt to income ratio. These debt to income maxes do, however, reduce as the credit score lowers. So when it comes to the Veterans Administration, it seems like they are more interested in what's called residual income than debt to income. And residual income is just the money you have left over after all your debt obligations, utilities. They also have something called dependent financial support. All that has been taken out of the equation. This is the money that's left over. And this can be a huge determining factor on even your approval for a VA home loan. The residual income requirements are always changing year to year, so I'm going to leave a link in the comments below that will guide you to what the ratios are now. So loan to value on a VA home, it's pretty easy because 99 times out of 100, these loans are going to be 0% down, which just means the lender's bringing 100% of the funds, which means the LTV is 100. If you choose to finance the funding fee, then the loan amount will be a little bit higher than 100%, but your closing costs will be less. On the VA home loan, there is no mortgage insurance, but there is a small, relatively speaking, funding fee that varies based on if you do not put any funds down, as well as if you've used the VA benefits before or not. The one-time funding fee for first-time use on a zero-down loan is 2.15% of the loan amount. Now, if you happen to be disabled veteran, then you will not be charged the funding fee when you finance using a VA home loan. There are no loan limits on a VA loan. However, you still need to qualify based on the lender's debt to income ratios and the additional detail that the Veterans Administration calls residual income that we went over earlier in the video. So for a VA loan, you will need 2 years job history, not necessarily with the same employer, and this history can include active military duty or civilian jobs, or a combination of both. If there were any gaps in employment over 30 days, you will need to have a letter of explanation and usually have at least 30 days pay stubs or an offer letter before you can get a pre-approval. When it comes to VA home loans, even though you may qualify for a zero down payment, this does not mean, however, that you will not have any funds to close required. You'll still have the typical closing costs associated with the loan, such as title fees, property taxes, escrows, homeowners insurance, etc. Now, there are ways to offset even these expenses, and you can do those by using one or a combination of these two things. First, you can negotiate seller credit up to 6% of the purchase price to offset your closing costs. Seller credits are just funds the seller agrees to give you from their proceeds to offset your loan costs. You could then even up your offer price to make up for the seller credit requested, as long as you are confident the home will appraise. Another option is to take a slightly higher interest rate and receive lender credits to offset your closing costs. Now, technically speaking, one could use this method to completely offset 100% of your cash to close, as long as you're okay with a higher interest rate and a higher loan amount if you do up your offer for the seller credit. Now, VA appraisals are very, very strict, and it's important that you address any of these issues before the appraiser steps foot into the home. Broken windows, rotted wood or paneling, broken or malfunctioning home utilities and appliances, exposed electrical wires, and chipped paint. And for some very, very weird reason, they are super ultra strict when it comes to chipped paint on all the government loans. So if you see that, know that you or the sellers will have to address it. So as promised, an amazing loan hack that will help you build wealth and additional income if you are a veteran. So this hack only works if you actually already own a home using a VA home loan, but I wanted to include it for you even if this is your first time using your benefits, just so you know it's an option down the road, because there is a ton of misinformation out there regarding VA loans. So most loan officers and lenders are going to tell you or assume that you may only use a VA loan for your primary residence. And this isn't 100% true. And here's why. If you were to already have a VA home loan on a residence that you lived in for at least 1 year, then as long as you were upgrading to a larger or higher value home, you may keep your current VA financing and go ahead and purchase the new home using your VA home loan. So you would technically have 2 VA home loans, 2 potential zero down loans, one you're collecting rent on and the other you are living in. You can use this even on duplexes, triplexes, or even fourplexes. Isn't that an awesome hack? So there you have it. Everything you need to know about the VA home loan, along with an amazing loan hack that will help you create additional residual income for your household. Please leave a comment below if I missed anything or you have a question. I'd love to hear from you. And listen, if you gained value or knowledge from this video, do me a huge favor and smash that like button so more people just like you can see this info. And if you liked this video, I'd like to invite you to watch one of my other videos. Over here, I walk you through the complete home buying process step by step. And over here, YouTube has determined that you may enjoy this video. Thank you for tuning in. Until next time, best of luck.